Hey, what's going on, Bruce? Is it BruceHurdle? BruceHurdle, what's going on? I am replying to your comment with a video. I do that sometimes. What you're looking at in the background here, this is the administrator panel. So you can see some other videos I was replying to at the same time here. And that's what you're looking at. So let's go ahead and unpack your comment here. Are you paid by the mortgage company? I don't know if you're just doing that part for showmanship or what, or if you actually don't know. It's pretty hard to believe that you don't know. People are probably sick of hearing me say what I do and how long I've been doing it for, because I pretty much mention it on every single video about 50 times, including the beginning of the video that you are commenting on. So, but just to give you a little background here, this is the first video that I did on this whole topic of using a home equity line of credit to pay a first mortgage off. And I wasn't happy with that one because it was too long. Been doing mortgages for 25.5 years, which I mention quite often, and but I'm new to YouTube. So I did that video 45 minutes, which I know now was a mistake. We can see the analytics behind the scenes, and we can see there's a ton of detail. I'm not sure if you have a channel also. You probably know this if you have a channel, and people will pop on just for a couple minutes. They're some of them from that community. It's a small community of people, yet they're robust. The average of about 92.5% of the people agree with me. They see what I'm putting out. They check out the facts that I'm putting out and disagree with what people from that community are trying to put out. And within that community, I don't want to tag the entire VB community. It's only that small sector. So they comprise about anywhere between 3% to 11% of the viewers. And then of that, there's that small percentage that seem to be cult-like in following this concept. So I made a second video that was 15 minutes long, and the first video didn't include all of what I wanted to, but I had to stop it at 45. And then even the 15-minute one, I tried to condense it, didn't include all the information. So I made a third one, which I'm very happy with. I actually linked that third one in the description of that 45-minute video. So I don't blame you or anybody else for not watching that 45-minute one. I know you watch bits and pieces of it, didn't watch the entire thing. That's on me. I'm getting better at the whole YouTube thing, but I really think you would enjoy the third video I did. It's much more concise. There's more information in a shorter period of time, and I get to the point a hell of a lot faster, because in that video I break down the tenets, the pillars that this whole misled concept of using a home equity line of credit to pay off a mortgage are based on. No one has done that. No one on flipping YouTube. None of the VB content creators that are pushing this, because you can't say something works without describing, without explaining the fundamentals behind it. Like I heard one of this young man, one of the popular content creators for this stuff, and he was about to explain how daily interest, which he was incorrect on, daily interest saves you money. And he went like this. I'm not going to put him on the spot, so not mention. I thought about cutting a clip for that video one time, but it's like, no, that's not what I'm about. But he started to explain daily interest, and he says, you know what? It just works. It just works. It just works. I mean, if I said that, my goodness, y'all will come try to slaughter me. If I just told you, oh, it just works. No, I put down detailed explanations. I use mortgage calculators. I use amortization schedules. I show you in dictionaries. I show you detailed walkthroughs as I do it. I mean, in that last video, I literally put 23 or 24 third-party links to verify the information that I'm putting out. Literally. So that whole concept is based upon the misbelief that first mortgages and home equity lines of credit have a different form of interest. No, that's not true, and I proved that in several videos. Number two, they believe that there's something called front-loaded interest, and that is what you are addressing in the next sentence of your comment are about here about you're basically renting the mortgage, and that's basically completely wrong. And I don't blame you for that one, because you know what? I have to admit, my first couple years in the industry, that one even got me. Misreading the amortization schedule and how that functions, I think that even deserves its own video. And I'm proud, because even though I've explained that like a dozen times, it's still hard for folks to grasp some people to grasp the concept. Again, most people who give me the thumbs up do. The good 90-something% of the people get it. But I want to communicate this to everyone. I don't want to leave anyone behind on this information. So I invite you to please, don't just skim through, watch it, and not the 45-minute video. I don't blame you. That one's too long. But the 25-minute video, please go there. I break it down right towards the beginning. You don't have to wait for the information. I've got that one much better organized, and you'll see there's no such thing as front-loaded interest. That's just an illusion created by misreading the amortization schedule. So no, and also this is something interesting here. Oh, I'm sorry. Let me back up. If the daily interest, I almost forgot about that. That's the third thing, and I mentioned that in the video. Incorrectly believe that daily interest somehow is there to help you. Oh, hell no. That's to help us. Daily interest accounts for charges made throughout the month. So you don't get away with the free interest loan. And that got misconstrued because of credit cards. There are credit cards that where interest accrues daily, and someone, I don't know where along the way, figured, oh, well, some credit cards do that, which that's true. Some credit cards, if you pay the balance before a certain day, you get to avoid paying interest. So they figured since mortgage accrues daily, it happens the same way. Oh, hell no. And I show proof of that in that third video, and to include some links to that, and even I put a link to Experian's website where they explain that you don't get to avoid interest on a mortgage by making the payment early because of daily interest. So if those three pillars that this gimmick is based on are not true, then there's no benefit to using a home equity line of credit to make those extra payments. Also, putting it into perspective, I teach, sometimes it seems like I'm preaching, making extra payments, because there's only so much you can do with the interest rate. Two ways to avoid interest or reduce the amount of interest you pay and pay the mortgage down faster. Get your interest rate as low as possible, make extra payments. Making extra payments, the one having the most dramatic impact. So I promote making extra payments all the time. If you watch the entire videos, you'll see I do that. But making extra payments with the home equity line of credit is just unnecessary ridiculousness that A, either comes out at the same figures, or B, you actually end up paying more money. So, the fringes of that community come down on me because I say, yes, make extra payments, just you don't have to use a home equity line of credit to make those extra payments. So am I so horrible because I say, yes, make extra payments, just don't use a home equity line of credit? Am I that horrible? No, So also, I don't know where this comes from about 30-year mortgage stuff. Like, we push 30-year mortgages. Where does that come from? I don't know if is somebody teaching that? Like, hey, these companies try to get you into 30-year mortgages. I don't know where the heck that comes from. In fact, at these large companies, actually even some small companies, they literally train their people to offer people calling customers or potential customers calling in to offer them alternative products. Because if you know any mortgage people, ask them, what is the number one question? Number one. Oops, hit my microphone. Number one question. Every credit union, every bank, every brokerage, every lender, when people go, what they ask, what is it? They're asking the first question, what is your rate? That's what they ask. They're not asking, that's 99.9% of them. That 99.9% don't ask, hey, how much interest can I save? There's a tiny bit of people that are up on things and they do, but most of them, it's what is your rate? And they're asking about the rate on the 30-year fixed loan. And that's why it's the most popular loan. That's what people want. It provides a long-term stable payment and the lowest payment, and that's what people go after. And the reason why those companies try to train their staff to offer alternative products is so they can be most competitive, because people are calling around looking for these 30-year rates. And so these companies try to teach their people to say, hey, offer 15-year rate, offer a 5 or 7-1 ARM, offer a 20-year loan, something other than a 30-year fix. So people, because people, they know they're calling around looking for 30-year fix. The people are the ones demanding that. So, what are the companies to do? Turn them away, because they're just going to go to the other company who's going to give them the 30-year fix that they want. Obviously, there's people that, after the fact, once they're on board, and they're more open to looking at some different products. Like, hey, you know what? I noticed you have between you and your spouse, you have a terrific income. Debt to income ratio is really low. You've got stable long-term jobs, and through the interview, it sounds like you want to stay here for a long time. Have you considered maybe a 15-year loan? I mean, I know on your 30-year loan, you can always make extra payments, but with the 15-year loan, you can actually get a lower interest rate, and you guys can afford it. And the conversation can go like that. We don't just try to shove something down their throat, when people are calling in looking for the 30-year fix. So, you can't hate on the companies. That's what people want. So they're going to give people what they want. And then the people that are open to alternative products, well, they'll get that. So, you can't hate on the lenders and banks and stuff for giving people what they want. Now here, let's see. The bank is clearly at a disadvantage with the HELOC. And let me just, because there's so many things, but let me just unpack this last thing here. Who also in that community is teaching that the home equity line of credit is not a mortgage product, is not something that we do? Who? I've worked for banks. I've worked for lenders. I've worked for brokerages. And I have a brokerage now, and I still work for an institution. And we do home equity lines of credit. I've been doing those for years. Where did this come off where we don't do it? Home equity lines of credit have been helping put food on my table for 25 years. Where does this, I don't know where they get that from. And it is a mortgage. Home equity line of credit is a mortgage. Make no mistake. I don't know where that comes from, that it's not. That's utter ridiculousness. If I pull your credit report, it shows up as a mortgage. If I pull a title search on your house, it shows up as a mortgage. If you go to sell your home and you have a home equity line of credit on it, you're going to have to pay it off. If you go to refinance your home, that's going to either have to be paid off or factored in to the combined loan to value and or the high loan to value. And if you don't pay it, you will get foreclosed on like a mortgage, because it is a mortgage. Look it up. Look up the definition. It is a mortgage. I don't know where that fallacy comes from in that little fringe part of that community. I've seen that a number of times now. I'm like, do they not know a home equity line of credit is a mortgage? I'm a damn mortgage guy, which means I do home equity lines of credit. So I'm not coming down on you. I'm just throwing this information out. I'd actually love to continue corresponding with you. I'd actually love for you to check out more of my material. I'd actually really, really, really love it for you to check out that third video, because I know the video you commented on, that 45-minute video one, I know it sucks in terms of its delivery. I'm getting better and better at that, but I've got a ways to go. I'm not a professional YouTuber. I'm a mortgage guy, as you probably know that now. So anyway, thank you. I do appreciate the comments, believe me. Positive, negative, because we learn from all of them. But I'd like you to do, if you watch the video and then come at me with something specific, like, hey, I saw the part where you talked about the daily interest accrual and I don't agree with this or this, or I saw the part where you were presenting the amortization schedule and I don't agree with this part of it, etc. And come at me with something, specific of substance, so I can address it and everybody can learn. Thank you again for participating in the comments, and I hope to see you commenting in the future.